impulsive discussions, and possibly may have to leave the corrective discussions for next time. I'm also getting a lot of emails showing, every single move labeled a 5 or a 3 and wanting me to assess the whole situation. That takes a very long time to go through all that kind of analysis. And it's important to realize that whether something's impulsive or corrective is a confluence of multiple different things. It's not just how much it's retraced, but it's how fast it retraces, how it channels in relation to things around it, how it relates to things around it, how complicated it is. There's a lot of things that go into that, and that's the reason chapter 3 was so complicated, because it was trying to explain every possible situation you could ever see on the chart. Find your particular situation in chapter 3, look at that, look at the rules that relate to that specific set of monowaves and how they're arranged, and then it'll help you to decide whether you should label something a 3 or 5 or an L3 or an L5 or whatever is recommended. Because the placement of L3s and L5s is very important in understanding where patterns ended and new patterns started. That will mostly be related to violent price action. So keep in mind, as you're forming a pattern, you want to make sure that the moves in the direction of the trend are more violent than the moves against the trend. So whenever you're seeing slower action compared to faster action, even if the slower action is bigger and more time consuming and more complicated and larger in price, that doesn't mean it's the trend. The trend is going to be in the direction of the most violent price action. So if a violent move is completely retraced slower, then it has to be wave A or wave C of a triangle or wave D of a diametric. It can't be wave 1 of something or wave 3 of something or wave 5 of something, because when you finish a 5th wave, it's going to be completely retraced, generally in the same time or less, but it won't be retraced extremely slow. So you have to be very aware there's a lot of things that are going into creating or considering whether something's impulsive or corrective. The base consideration is generally that if it's between 38 and 61%, that the move that you're looking at that was retraced between 38 and 61% is more likely to be impulsive than anything else. If it's less than 38, especially if it's less than a third, or if it's more than 61, then the odds are pretty substantial that it's going to be a corrective move that happened before the corrective action. And if something is completely retraced faster, then the last move is likely to be impulsive. If it's completely retraced slower, then the last move is likely to be corrective. So those are the general guiding principles, but for each situation, if you want to get a more accurate idea of what's possible and what's really going on, then you're going to want to go back to chapter 3 and find the exact situation that describes what you're looking at, and that will give you a much better idea of how to deal with it. Okay, so let's move on to the central considerations. Now realize that chapter 5 pretty much covers the vast majority of all information on LE wave presented in all books before my book came out. So chapters 1 through 4 is all the preparatory work, what wave theory is about, how to draw your charts, how to begin the preliminary analysis where you're not trying to decide if something's a 1 or a 2, or a triangle or a flat or whatever. You're just trying to decide if an individual monowave is impulsive or corrective, so that you can begin piecing together possible sequences. And then chapter 4 goes through deciding, are these sequences you're looking at combining like with like? Are you looking at same degree patterns, or are you looking at different degree patterns? And if you're looking at different degree patterns, you're going to have to zoom in and reconstruct those smaller degree patterns first before you can move back to the larger degree patterns. So that's what chapters 1 through 4 were about. Once you get to chapter 5, this is generally where most books on wave theory start. They just immediately dive into impulsive and corrective action. They immediately start talking about 1, 2, 3, 4, 5 and ABC, and they show simple diagrams like what we see right here, which are very unrealistic. You should never ever consider something that looks like this to be a 5-wave move under any circumstances ever. There's no exceptions to that. This could be a correction, it could be a flat, only if you're dealing with short time durations. This means that If your number of data points required to create this is only 3 data points, or maybe 4, then it's possible a flat would be this simple, where you have this is 1 data point, this is 1, that's 1, that's 1, so that's a total of 4. And if that's all you have, then this could be a flat. But the more data points you get, the more a correction or a flat will not look like this. You're going to start to see the phenomenon of alternation and time differences, complexity differences, and things like that. So let's go through the most basic concepts for creating what might be an impulsive pattern. Now, these are rules that have to be followed before you can consider something to be impulsive. If these 7 rules, there's number 7 on the next page, if these 7 rules are not followed, then it's not possible that you're dealing with an impulsive pattern, or virtually impossible. I think it takes into account every possibility, so I'm pretty sure if it doesn't follow these 7, that it can't be impulsive. So starting with the first rule, you have to have 5 adjacent segments, and they have to meet the structure series of an impulsive pattern. So it has to be a 5, 3, 5, 3, 5, which would be a standard impulsive pattern, or it would be a 3, 3, 3, 3, 3, which might be a terminal pattern. Obviously, 3 of the segments have to go in one direction, 2 will go in the other direction. After the first segment, the second move cannot retrace all of the first one. There is no exception to this. So if your second segment retraces all the first, then it's not an impulsive pattern. The third segment must be longer than the second. And immediately after the third segment, you're going to have a reaction that goes in the same direction as the second segment, and that cannot retrace all of the third segment. So this would be eventually potentially called wave 4. And wave 4 can't retrace all of wave 3. Fifth segment must always move, will always be longer than the fifth, we'll say almost always be longer. Okay, so the fifth segment will almost always be longer than the fourth, but it can be as little as 38%. This would be extremely rare, but it's possible. If a fifth segment is this short, then you're going to see the market reverse and violently decline if the trend was going up, or violently rally if the trend was going down. So realize having a fifth wave that is this small in relation to the fourth segment would imply an extreme failure and extreme conditions that produce hyper-violent counter-trend action. So if you just see the market slowly recover from a fifth wave that's only 38% of wave 4 going downward, the fifth wave going wildly recovers, then this would not have been what happened. If the fifth wave is going up and it's only 38% of wave 4 and the market declines slowly, then it's not a fifth wave. So realize that this is only possible if there's extremely violent action that happens right after. And then the last thing is, when you're comparing the movement of the 3 waves going in the same direction, the third can never be the shortest of those 3. Frequently it's the longest, but it just can't be the shortest. So wave 1 can be the longest, 3 would be next, 5 would be the shortest. 1 could be the shortest, 3 would be next, and 5 would be the longest, or 3 is the longest, but it just can never be the shortest. By the way, this also applies to triangle patterns, whether it's expanding, contracting, or neutral. The C wave can never be the shortest of the 3 segments. So if you compare A, C, and E, make sure that wave C is not the shortest of the 3. If it is, then you're not dealing with a triangle. Okay, so we're going to go through some examples of this to see what qualifies and what doesn't qualify as impulsive action. There's some diagrams here. It's describing the diagram, but I'm going to get to the diagrams by moving to the next page. So in diagram 5.2, which is this whole section, figure A shows a situation that's impossible. It's 5 segments, but the 2 wave, or the second segment, is retracing all the first. So this can't be considered an impulsive pattern. Okay, under no circumstances would this ever be an impulsive pattern. So don't ever make that mistake. Here's a situation where it says that the structure for label B does not break any of the rules, so it's possibly an impulsive pattern. I don't like the fact that there's not proper alternation between 2 and 4, but there's circumstances where this may be possible, but it would probably be a terminal pattern. For diagram C, it says it obeys the rules, but it's an okay situation. There's still not great alternation between what would be considered 2 and 4, but it's at least possible it's a 5-wave move. This, of course, doesn't have 5 waves, so it can't be a 5-wave move. In this diagram, the middle section is too small, so this could not be considered an impulsive pattern. So this would not be 1, 2, 3, 4, 5. Now it could be 1, 2, 1, 2, but not 1, 2, 3, 4, 5. In diagram F, it says that it's up for consideration, but the fact that the 4th wave overlaps the 2nd wave would indicate this would only be considered a possible terminal formation, where this would be a corrected pattern, a correction, a correction, a correction, a correction. So you'd have 5 corrections in a row that combine together to make one single impulsive pattern. You can see what is considered maybe wave 4 would overlap wave 2, and that's crucial and important in the terminal pattern. If this structure were correct, right after it's over, the market would go through a violent sell-off that retraced all of this movement about 25% of the time. Here you can see that the 4th segment retraces all of the thirds, so this could not be considered an impulsive pattern. For diagram H, it says there's no rules broken, but the alternation between 2 and 4 is very suspicious, and there's no clear extended wave. We'll get into that shortly, but I guess there's a remote chance. I would never consider this a 5-wave move, though, because there really is no extended wave. Diagram L is also a possible 5-wave move. There's also a possible 5-wave move. There really is no great extended wave, though, so I wouldn't consider this a good candidate. The length of wave 3 is just a little bit shorter than wave 1, so it's not a good possibility. It more likely would be a 1-2, 1-2 situation, or a zigzag and an X wave, but not a 5-wave move with it ending right here. This is a situation where if the 5th wave is failing, the market would have to go through a very violent counter trend move. But realize you should never see a 5-wave move in which wave 3 is about almost 7 to 10 times longer than wave 1. That's just not the way impulsive patterns develop, so I would never consider this to be a 1, 2, 3, 4, 5 situation. And the final example shows that what could be wave 3 is too short. It has to be longer than wave 2, so the fact that it's too short and doesn't exceed the top of wave 1 means this can't be considered a 5-wave move. So that's just taking the concepts that we just discussed in this section here, where it goes through all the rules 1 through 7, and taking them and applying them to see if it's even possible that what you're dealing with is impulsive. It doesn't mean it is. This is just the basic preliminary foundational concepts that have to be present before you can even consider something to be a 5-wave move. So in this particular arrangement, you would immediately get rid of scenario A, you would immediately get rid of scenario D, you'd immediately get rid of scenario E, you immediately get rid of scenario K and G. The rest might be, but then there'll be a host of more rules that have to be followed. So that's step 1. And then you move on to the next rule, which is pretty much essential in impulsive patterns. There's rare exceptions, but it's pretty much a requirement in a 5-wave move that one of the waves extends. Now, an extension means of the waves between 1, 3, and 5 going in the direction of the trend of 1 bigger degree, one of them is going to be about 161% or more, and generally more, but at least 161% of the next largest wave. So if wave 1 is, say, 100 points, and wave 3 is 110 points, and wave 5 is 120 points, then that would be lacking an extended wave, and you shouldn't consider a move like that to be impulsive, even if there is alternation between what you think is 2 and 4, even if almost all the other rules are met. If you don't have an extended wave, or wave is close to 161% and generally 161% or more, then you're almost certainly not looking at an impulsive pattern, but more likely a zigzag followed by an X wave. So make sure that this rule is followed in your set of 5-segment mono waves that are connected together. Make sure those 5 mono waves potentially qualify as a 5-3-5-3-5 for it to be a standard impulsive trending pattern, and a 3-3-3-3-3 to be a terminal impulse pattern. And if you finish a 5-wave move, the reaction after, if it's a normal one, will be, not so violent typically. If you're finishing a terminal pattern, the move after will be and has to be very violent. So let's move on to the next segment. Once you have a situation where the rules up to this point have been met, then you can begin to consider placing progress labels. So we've had to go through chapters 1, 2, 3, and 4, and part of wave 5 before we get to the point where it's safe to start putting 1, 2, 3, 4, 5 on structure that you think might be impulsive. So it's interesting to me that most books start off with just the assumption to just start throwing labels around, not realizing that if you place wave 1 on something, it automatically requires wave 2 to do certain things, and if it doesn't, then it can't be a 2-wave. So for example, if you mark something as wave 1, then you're automatically meaning, if it's a standard 5-wave move, that wave 2 isn't going to retrace more than 61% of wave 1, and that wave 2 is going to take the same amount of time or more than wave 1, and that the move after wave 2 has to be at least 61% of wave 1 and probably comfortably larger, because wave 1 is not normally the extended wave in a pattern. So the minute you place a progress label, it immediately implies all kinds of things that most people are unaware of when they're beginning their wave analysis career or learning process. So that's the reason I didn't start off with that labeling process, because you have to know a lot of things before you can actually do that and be confident that what you're placing on your chart is actually correct. So obviously, if you go back to those 5 segment patterns we talked about earlier, and it doesn't break any of the initial construction rules, then you can go ahead and place the 1, 2, 3, 4, 5 as it mentions down here. And then you're going to move on to the next step in the process. And this is where the rules start to get less mandatory, a little more conditional depending on which wave is the longest, which waves are the shortest, which waves take more time, and so forth. So the rules get more conditional from this point forward and dependent on what's happening. So as you move into this next phase, the first thing you're going to want to check for is alternation between what you think is wave 2 and wave 4. So if you've marked something as wave 1 and 2 and 4 are not overlapping, then you're dealing with a trending sort of standard 5-wave move. And in that situation, you want to make sure that the behavior between waves 2 and 4 is going to be different. The more time consuming the pattern is, the more obvious the alternation is going to become. Now keep in mind, you still need to control complexity on your chart. So you're still trying to limit complexity between 13 and 55 mono waves. If you go down to really simple structure to where there's only 5 mono waves, the alternation rules and complexity rules and retracement rules will get a little bit warped, and it gets harder to be sure that what you're looking at is impulsive or corrective. So that's the reason why I have it as a standard complexity limit, that you want it to be about 13 mono waves, because once you reach that level of complexity, then the patterns can fully develop and they'll follow the rules that are discussed throughout the book. And it's another reason why controlling complexity is so important. You don't want to have too little, but you don't want to have too much. Okay, so when you have this 5-wave move that you're looking at and you see what you think is wave 2 and wave 4, you're going to want to make sure that there's some kind of alternation between the two. So one of the ways that it can alternate is in price. This will just be numerical distance covered. So maybe wave 4 is 10 points and wave 2 is 5 points. It could happen in the other way, where wave 2 takes more price and wave 4 takes less price, but you don't want them to be similar. They can be, but it's preferable they're different, because there's 5 ways you can alternate. So as long as some of the other alternation occurs, then they could be similar in price, but the odds are very high that they're going to be different in price, time, complexity, severity, intricacy, and construction. The more the better, and the more that you're dealing with impulsive action if you have a majority of these. So 3 out of 5 is a good minimum target. If you have less than 3, it becomes more questionable. So let's say that you're dealing with a well-constructed chart, 13 to 55 monowaves. Wave 4, so wave 2 takes 10 points. The odds of wave 4 is going to take 61% of that or 161% of that, or something comfortably different than 10 points. When you move to the time observations, if wave 2 took 10 days, the odds of wave 4 is going to take maybe 6 days to 16 days, but it's probably not going to take around 10 days. Severity has to do with percentage retracement. It is possible that depending on the size of wave 3, that wave 4 and wave 2 could both be 10 points, but if wave 3 is a lot smaller, then that 10 points would be a more severe retracement. So when you're measuring retracement, if you measure wave 2 and it's $10, and wave 2 retraces $6, and that would be around 61%. And the odds in that situation that wave 4 would be around 38% of wave 3, no matter how big or small wave 3 is going to be. So that's what the retracement or severity concept is about. Intricacy just has to do with the number of monowaves that you see. So if you see wave 2 is 1 monowave, then wave 4 is likely to be 3. If wave 2 is 3 monowaves, wave 4 is more likely to be 1 or to be 5 or to be 7, but something different than 3. And then finally, if you have enough development, you're dealing with, a pattern of a chart that has 25 to 55 monowaves, then you're going to probably start seeing structure that develops for wave 2 and wave 4. And there's a good chance that if wave 2 is more horizontal, like a flat, then the fourth wave is more likely to be a trending correction, like a zigzag, or vice versa. So if 2 is a zigzag, then 4 is more likely to be a flat or a triangle. And these are relative concepts. So you could have complex corrections that take 10 days, let's say take 50 days, and an even more complex correction that takes 100 days. So everything's relative to each other. So when you're talking about simpler and more complex or intricacy, it's all a matter of relativity. Okay. Let me move on. Okay, so we're going to go through some diagrams here where it's showing the possible places where you can get alternation and how it might happen. So these are the two areas that you're looking for alternation to occur. And the more that's present of those rules that we mentioned earlier, which there's a total of 5, A, B, C, D, and E. So it's time, price, severity, intricacy, and construction. So you're always hoping to get a majority. Depending on how simple wave 2 and 4 are, you may not be able to get all of them because you may not have visible construction. It may be just a simple monowave that's smaller and a simple monowave that's bigger. So construction and intricacy may not be present, but you should always have price, time, and severity present. So the first 3 are always going to be there, and you want to have at least a majority of what's possible. So if you only can have 3 because both 2 and 4 are just monowaves, then you're going to have preferably 2 out of those 3. So price alternation, time alternation, or price and severity alternation, or time and severity. So 2 of the 3. And then of course, if you get some subdivision between 2 and 4, then you're going to want to get 3 out of 5 or 3 out of 4 if that's where things stand. Let's move on to the next diagram. Okay, so here shows how that alternation might occur. I found this on the web. My phone thought I was talking to it. So here shows a 5-wave move where you're just getting some severity kind of alternation and price alternation. So this is a bigger move in price than this. This is a bigger retracement percent-wise than this. Now this really wouldn't qualify as a good 4th wave because it's not retracing enough of wave 3 and it's not taking enough time. But we'll get into those rules later. It's just important to realize that we're focused right now on the alternation. And are these alternating? They do alternate from a price and severity perspective. As far as going down the road to confirm whether it's a 5-wave move, I would not consider this to be a 5-wave move. Here's another example where you can see clear differentiation between 2 and 4. The 3rd wave is shorter in this case. Again, clear differentiation between 2 and 4 for simple patterns that don't have any intricacy or visible structure. And then we move into situations like these where there starts to be some subdivision and alternation from a construction and complexity standpoint. So here wave 2 alternates, here wave 2 subdivides, wave 4 does not. Here wave 4 subdivides, wave 2 does not. Here, even though you're getting a little bit of difference in price, these are very similar and really would not qualify as a good 5-wave move. So anything that looks like this would be extremely suspicious. I don't know if wave 2 is 38% of wave 1, but wave 4 definitely is not 38% of wave 3. That applies to almost all these diagrams. This one would qualify, but this too is a little too small. So realize these diagrams give a more visual representation of the alternation we're looking at between 2 and 4, not how well it relates to the other patterns. This, of all the diagrams, this would be the, if wave 2 was a teeny bit bigger, this would be a representation of what might constitute a 5-wave impulsive pattern. If this 2-wave were a little bit bigger, this could be a good impulsive pattern also, but none of these really qualifies very well because of the small size of either 2 or 4 in relation to the previous pattern and the amount of time. Remember, a correction needs to take as much time or more as the impulsive pattern, so wave 2 should have taken the same amount of time or more. Wave 4 looks like it maybe did, but this 4th wave is too small in price and time, so none of these diagrams really reflect a truly good impulsive pattern. This starts to look a little bit better, but the simplicity of wave 1, 3, and 5 is not a good setup because you don't want to have extreme complexity between, visible between 2 and 4, but not have anything visible in 1, 3, or 5. So it's always a balancing act to make sure that your patterns that you're comparing are probably of the same degree, and that's where the rule of similarity and balance comes in, where you're making sure that wave 2 doesn't take too much time or not too little time, not too much complexity, not too little complexity. And chapter 4 plays a very important role in determining what movement can connect with what movement. So if I were looking at this, the first thing I would notice is this is too small to be wave 2 and doesn't take enough time. So I would let it subdivide and then I would check it again. Well, complexity wise is probably enough. Time wise, I'm not sure. It's a close call. Let me get my ratio divider out here real quick. Yeah, it's a little too small. So then I would not try to finish wave 2 here and I would let it continue to unfold. In this case, it took a lot more time, a lot more complexity. So it starts to make wave 1 and wave 2 sort of suspicious in relation to each other, but not impossible. But once wave 2 subdivides this much, wave 3 is going to have to subdivide. It would be virtually impossible to have this much complexity in wave 2 and wave 3 just be a monowave. So this is where this structure would start to fall apart. But for this purpose, at this point in chapter 5, the focus is wave 2 and wave 4. And as far as that is concerned, 4th wave looks like a contracting triangle. 2-wave looks like a complex running correction. So the alternation would exist because their structure is different. So that would satisfy the construction rule, which is under the rule of alternation. The E, segment E shows construction. One pattern may be a flat or the other is zigzag. In this case, one pattern is a complex correction, the other is a triangle. Okay. Here it shows the relativity of complexity. So you could say that because this takes less time, it's more of a simple correction in relation to the more complex horizontal contracting triangle. Again, not paying attention to 1, 3, and 5 because they really wouldn't be this simple if wave 4 and 2 were like this. But for diagrammatic reasons, I'm just focused on the structure of wave 4 and 2 and comparing them. So you would consider wave 2 to be the simpler correction and wave 4 to be more complicated because it took more time and more monowaves to develop. Okay, so let's move on to the rule of equality. This has to do with what happens to the 2 waves that are not the longest. So when you figured out which wave is the longest, let's say that you're dealing with a 5-wave move in which wave 1 is the longest wave, then the rule of equality is going to focus on waves 3 and 5. If the 3rd wave is the longest, the rule applies to 1 and 5. And if the 5th wave is the longest, the rule applies to 1 and 3. So you're looking for the 2 waves that are not the extended wave, not the longest wave, to tend to be more similar in price and time and complexity than the one that's longer. Now this doesn't always apply, but I'd say 90% of the time it applies. If the rule isn't applied, then the 2nd longest wave will be the most complicated. instead of the first longest wave. But generally, this is the way you're gonna approach the structure, and assume that the waves that are shorter are going to tend toward equality in price and time and complexity. So let's say that the fifth wave is the longest. Wave 1 is 10 points. Then the odds are pretty good. Wave 3 might be 11, 12, 13, but you don't want it to be 17 or 18, because then it starts to become more than 161% of wave 1. You also would want to see if, say, wave 1 takes 10 days, you don't want wave 3 to take 30 days. You want it to be somewhere in the ballpark of similarity, so maybe between 10 to 15 days, not much more than 16 days, because then it starts to move into the realm of being different, too different from the wave it's supposed to be similar to. So as a general rule, equality would be anything less than, closer to 100%, more than 61, and less than 161 in price, time, and complexity. So the closer they are to 100% of each other, then the more they would be considered meeting the rule of equality. Okay, so you have this 5-wave move we've been going through, and it's obeyed, the initial construction rules, and then you have alternation present, you have an extended wave present, and then you want to make sure that you have no overlap if you're dealing with a normal 5-wave move, and that you do have overlap if you're dealing with a terminal pattern. So in a 5-wave move that is labeled 53535, you want to make sure that the bottom of wave 4 does not overlap the top of wave 1, or if you're in a downtrend, the top of wave 4 doesn't fall into the range of wave 1 or wave 2. So here shows a diagram. You want to have separation between the price range of wave 2 and the price range of wave 4. It doesn't have to be a lot, but they should not overlap. So wave 4 should not dip below this high. If it does, then either you're not dealing with a 5-wave move, or you're dealing with a terminal pattern. I'm trying to find that sequence here. I think I went too far. So if it's a 53535, you do not want overlap between these two threes. If it's a terminal pattern, then it's going to be a series of threes, and there will be overlap between the second and the fourth corrective segment. And that's a whole different, kind of animal than a standard 5-wave move. Standard 5-wave move generally means the trend will continue following a correction, and that correction won't retrace more than 61% of this move, and then the trend will continue. If you get a pattern in which there is overlap, so part of wave 4 overlaps part of the price range of wave 2, and that moves you into the terminal category. And that means when this pattern is over, if all the other rules are met, where there's an extended wave, in this case wave 1 is the extended wave, you can see there's alternation between 2 and 4. 2 is more complicated, more time consuming. Wave 4 is simpler, less time consuming. The third wave is not the shortest wave, but the 2 and the 4 overlap. If all these rules are met, then what has to happen the minute this pattern is over is the market's going to have to go through a violent counter trend move, because this kind of pattern, a terminal pattern, only happens at the end of very important uptrends or downtrends. It does not happen just in the middle of somewhere and then the market just meanders and goes on. This will be the end of a major advance on the time frame that you're following. So if this is a daily chart, it would be the end of a major top for probably weeks. If it's a monthly chart, it's multi-year kind of turn most likely. So realize that you're dealing with a different kind of animal than if there isn't overlap. The breaking point section just is saying that after this point, all the rules become a little more subtle, conditional. They depend on what kind of patterns are forming. So there's not a concrete set of rules that applies under all impulsive situations. So you have to start learning a little more subtlety and start incorporating channeling to help you really determine, are you looking at a 5-wave move? Is everything correct? And help you actually predict when that 5-wave move might end. So the next step in the process is when channeling comes into play, and that'll help you to figure out where individual corrections start and stop, and help you know whether you've actually finished wave 2 or wave 4 and started wave 5 or not. A lot of people don't really pay attention to this rule, and they have all kinds of wacky counts because of it. And when I say wacky, I mean counts are going to have to eventually change and fix over time. One of the reasons that in my service, my wave counts don't change that often is because I have so many rules that unless all the rules are met, then I really don't know what's going on. But at least it prevents me from assuming I know when I actually don't know. When you're following orthodox LA wave in the traditional fashion with a more simple set of rules, a lot of times you think you know what's going on, but it turns out to be wrong over and over, and you have to keep adjusting. And this, I'm sure you've seen happen to a lot of people who put out LA wave analysis, and they've been changing their minds about the US stock market for decades now because the market just keeps doing things that they didn't think were possible. And this is partly due to not following channeling rules, not following timing rules, making sure the two wave always takes the same amount of time as more as wave one. Fourth wave always takes the same amount of time or more as wave three. There's always alternation, not just some of the time. There's always an extended wave, not just some of the time. So those things can't be broken. If you break the rules, you're going to eventually have to change your count. Okay, so let's move on to how channeling can be used to put together good wave counts. So if you're starting in advance, you see this move up and you're just assuming it's wave one for whatever reason. The market goes through a correction and you draw on your channel and you notice that this advance isn't going quite as fast as this one, and then the market starts reacting and breaks this trend line. The minute it breaks this trend line, that's telling you that wave two did not end there. This can't be a larger two and this is smaller wave one and this is smaller wave two. A lot of people do that, but that is not correct. It never is correct. It will never work. And you have to adjust your count as shown here, where you have to force it so wave two is not over and the pattern is going to continue. Now, the reason a lot of people don't like doing this is because they assume if the market's making new highs, well, then it must be part of wave three. But you can have corrections that drift with the trend, and you're going to know that this is actually a drifting correction. When this is over, the market's going to advance much quicker and faster and further than what happened over here, because a drifting correction is a sign of strength. So if you see the market where you have a channel, it gets broken without enough advance to conclude wave three, so this is less than 61% of wave one, and it breaks a channel before that happens, then you know you're still in wave two. And if you draw a channel over the new, what you think is wave two, and it breaks it again, well, then you know wave two is starting to drift, and it's a complex drifting kind of correction. And eventually, when it's over, if this really is a single correction after the first impulsive or first advance, then the next move out of this has to be bigger and faster than this to prove that this was a strong drifting correction. So remember, when a correction drifts, it implies strength. If it drifts downward, it implies weakness. But if it drifts upward, it implies strength. So anytime you see a correction do something like this, where you keep trying to create a channel and it keeps getting broken, well, eventually when it's over, the next move will be bigger than the move that occurred before, and probably will kick off with a stronger move initially, but it eventually will be larger than the first segment. So whatever this first segment is, whether it's wave A, wave one, wave three, wave C, no matter what it is, the move after a correction like this is drifting will be larger than the move before. Okay, now sometimes you get situations that look like this, where it's, this is the low, but the market moves in a weird way because of the way we plot the highs and lows in order, and it creates a strange little bump in the structure. You want to adjust your channel to go to that bump, and that's where you should assume the two wave actually ended, not down here. So what would have happened in the next lower time frame? So let's say this is a weekly chart. What would have happened on a daily chart is you had a decline, a rally during the week, and another decline that finished here, and this is where wave two ended. And then you start the third wave with a powerful advance, because that two wave was something like this on a daily chart, but looks like this on a weekly chart. Okay, so if you have any questions about that, just let me know. I'm going to continue. Channeling should be something you always use when you're in a five-wave move, and should be continued to use until after wave five is over. So let's say that you've concluded wave two, the market has started in advance. That's at least 61% of wave one, preferably more than 100, and no more than about 300%, and you're going to call that wave three. Once wave four begins, any bounce off of what qualifies as a fourth wave, then you would draw the channel. And now when I say what qualifies, if the fourth wave takes less time than wave three, if it takes less complexity than wave three, if it doesn't retrace at least a third of wave three, then you should not assume that this is wave 4. So you're wasting your time, and it's going to take more time, it's going to take more complexity, and it's going to retrace more. So I would have never considered this as a possible 4th wave because it doesn't retrace enough, it doesn't take enough time, and so forth. But for explaining this process, I wanted people to understand how 4th wave isn't over. It's because after the next advance, the market breaks it, but it doesn't have a violent sell-off. If this were the end of wave 5, the market would have collapsed because this is a 5th wave failure. If it just meanders through the channel, then it means wave 4 is not over and you have to move it to the right. And you keep moving it to the right until you make new highs, and the next advance is at least 38% of wave 3 and at least probably 38% of wave 1, but preferably it'll be much closer to the length of wave 1 if wave 3 is the longest. But you're having to have a situation where the channel keeps changing and moving to the right until you make a new high. Once you make a new high, then you can start to consider maybe this is the 4th wave and it's the conclusion of wave 4. But to qualify, you need to make sure it takes as much time or more as wave 3, and it's retraced at least a third of wave 3, preferably 38% or more, and that the 5th wave then has to be at least a third of the next longest wave. Wave 1 would be the next longest, but the 3rd wave is the longest in this diagram. Most likely wave 1.5 would be similar, and I would probably not accept anything less than about 61% for wave 5 compared to wave 1. It could be bigger, but at least 61%. And when you're thrusting out of a triangle, of course, you want the thrust to be about equal to the biggest wave, which would be wave A. But this is the way channeling should be done. Once you have met the minimum requirements for a 4th wave and you have a low that meets those requirements, then you can draw your channel. Once it does, then the market has to start making new highs to be part of a normal 5-wave move. If it doesn't make new highs, but the 5th wave follows all the other rules, it takes enough time, enough complexity, enough price to minimally meet the requirements of a 5th wave in a 5-wave move. Then if the 5th wave doesn't make a new high, that failure would imply a violent counter trend move has to happen. Otherwise, 9 times out of 10, the 5th wave will make a new high if the trend is up, or a new low if the trend is down. And it's going to take enough time and complexity and be enough price movement to compare to the other waves of the same degree. So this is where you would take your rule of similarity and balance in chapter 4 and make sure there's enough present to qualify as the same degree. And once it meets the minimum requirements, then you start to get on your toes to wait for what could be the conclusion of an important pattern, maybe exit some long positions. If it's the end of an even larger 5-wave move or a larger correction, then possibly look to go short. Okay, Fibonacci relationships. A lot of people misuse Fibonacci relationships. The most important relationships in any pattern don't occur between counter trend moves, but in same direction moves. So you're not focused on whether wave 2 relates to wave 1 by 61%, just that it doesn't retrace more than 61%. It could be 61, 55, 50, 45, 40, 35. As long as it's in that ballpark range between 61 and 38% or 33%, then it could be a 2-wave correction. If it's more than 61, you're moving outside the realm of an impulsive pattern and into an A-B situation. If it's less than 33%, you're probably moving into either terminal territory or some kind of complex correction. So Fibonacci relationships are not used to predict how big wave 2 will be in relation to wave 1 or wave 4 in relation to wave 3. It's just used to give you those limits that anywhere in that range, it's an acceptable amount, and it can qualify as a 2-wave or a 4th wave. If you're looking at waves going in the same direction, that's when Fibonacci relationships become much more likely. So between 1, 3, and 5, between A, C, and E, between 2 and 4. So waves going in the same direction is where you're going to see Fibonacci relationships occur much more often. And here shows some examples. If the first wave is the extension, you want wave 3 to be at least 61% of wave 1, and generally in that case it'll be a little bit bigger than 61% of wave 1, like 65%, 64, 63. It's generally going to be a little bit longer than 61%. This is the one exception where the relationship will be a little bit off. If the third wave is the extension, then 1 and 5 will generally be about equal to each other or be related to each other by 61%. In the third wave extension will almost always be around 200% of wave 1 to 250 or 60%. It will virtually never be just 161%. In a fifth wave extension, that's where wave 1 and 3 will be similar, but wave 3 has to be a little bit bigger, and the third wave could be up to about 161%. If wave 3 is 200% of wave 1, then most likely the fifth wave is not going to be the longest wave, or you're not dealing with impulsive action. You might be dealing with a zigzag, and what you think is wave 4 is actually an X wave, and then you're getting another zigzag. So it's very important in a 5-wave move, you don't let wave 3 be more than 161% of wave 1, but it should be between about 101% to 161%. Also, the fifth wave itself could relate to the entire 1 through 3 sequence. If you measure from the bottom of wave 1 to the top of wave 3, wave 5 might be related to that whole move, added to the bottom of wave 4, or maybe to the top of wave 3 in an extreme blow-off situation. After we've reached this point in the process, if all these rules are met, then you're going to want to start placing progress labels on your chart. Up until now, it was sort of a maybe situation. You're analyzing, you're testing, you're making sure all these rules are being met. Once you get to this point and all the rules have still been met, then you can start placing labels on your chart. Now, the concept of degree is a very relative concept. It doesn't matter what you call primary degree or intermediate degree. It doesn't matter how big or how small they are. But once you decide that something is a primary degree, then that sets the stage for what qualifies as everything that's bigger and smaller. So if you say a primary degree is a pattern that took 10 days and $10 and 9 monowaves, let's say, then that immediately means for it to be a bigger degree, it's going to have to be about 3 times more time consuming, more complicated, and more price consuming than that. If it's going to be a smaller degree, it'd be about 1/3 of that. So anything that's similar is going to be generally considered the same degree. And so the term, the degree labels you place is, relative, but once you decide on it, then it's going to dictate what qualifies as that particular degree. Okay, so one thing that's missing from most books on wave theory is realistic diagrams and representations. So this is the point in the book where I start to get a lot more realistic about how patterns might look on a chart. And so let's just take a look at some of those diagrams. So here shows 5-wave move that possesses a clear third wave extension. The third wave is probably about between 200 and 250% of wave 1. You can see wave 2 looks like a flat, wave 4 looks like a zigzag. You have a clean channel between the two. The parallel channel drawn across the top of wave 1 cuts through the third wave. This would be typical, and the fifth wave would finish around the high of that. And when the fifth wave is over, the market would produce a drop bigger and faster than any decline that took place during the entire 5-wave move. And we'll get into some of these rules later, but part of the confirmation process in chapter 6 is that you want to reach the 2-4 trend line in the same amount of time or less as wave 5 took to form. And that's what I call stage 1 confirmation. And preferably, to be really sure the 5-wave move is over, you want to produce stage 2, which means you completely retrace wave 5 in the same amount of time or less as wave 5 took to form. And that would be stage 2 confirmation. So getting to here quicker than wave 5 took to form. And if the pattern looked like this, and you got this kind of behavior, a channel like this, you have the alternation, you lack overlap, so they're not part of wave 4 is not in part of wave 2's range, then you can be virtually certain you're dealing with a 5-wave move. Now, again, you're going to want to make sure that wave 2 retraces at least 38% of wave 1, and wave 4 retraces at least 38% of wave 3, but not more than 61% and not more than 61% here. These are a little bit off. When I wrote my book 30 years ago, I wasn't quite as well versed on some of these rules as I am now. So I realized some of the diagrams are still a little bit off, and you might want to just put a little, some notes here that you would want to make sure wave 4 is at least 1/3, and this is at least 1/3, and no more than 61 and no more than 61. Excuse me. Take another sip of my water. So all these diagrams here would be close to what you might see I don't like this third wave extension because it's a little too excessive. So again, you might want to mark on this chart that the third wave shouldn't be 300 or 400% of wave one. It should only be around just above 161 to maybe 261, somewhere in that range. If it's a lot bigger, then you're dealing with something else. And I would think more likely this is just missing a wave and this whole move is just 1.5 point. Here's some other diagrams where it shows the first wave is the longest. You can see the nice alternation between 2 and 4. Again, the lack of overlap. Third wave is shorter than wave 1. Fifth wave should have been a little bit longer here to better relate to wave 3. So the two waves that are shorter should be more similar, at least 61%. I would say this is maybe 38%, so it's a borderline case, but very unlikely to be that small. But after this pattern would be over, the market would have to again go through a violent sell-off, and it would probably drop into this range or go even much lower if this was the end of a major top or bottom. In a terminal situation, you're going to get overlap between 2 and 4, and this is the only time, the only impulsive pattern in which the first wave can take longer than the second wave, and the third wave can take longer than the fourth wave. So realize this is the only time that's allowed is in terminals. It's possible wave 1 would take less time than 2, and it's possible 3 takes less time than 4, but it's not mandatory. It is mandatory in a standard 5-wave move that 2 takes the same amount of time or more and 4 takes the same amount of time or more as wave 3. It's not mandatory in a terminal, and that's because everything is the same. This is impulsive, this is corrective, so the relationship is different between them. But if you have a correction followed by a correction, a correction, a correction, and a correction, the rules are a little bit different. So since they're all the same, the waves that are bigger are likely to take more time and more complexity. So wave 1 is bigger in price, so it's likely to take more time and more complexity than wave 2. So realize that this is allowed in terminals, it's not allowed in standard 5-wave moves. And you will get that overlap between 2 and 4. And when this pattern is over, you're going to get a hyper-violent reaction that will retrace virtually all of this in about 25% of the time. If the fifth wave is the extension in a terminal where, again, 2 and 4 overlap, then the retracement may not be quite as fast, but it should, in about 50% of the time, retrace this whole structure. Okay, these are the same diagrams going in reverse, so I'm going to, I think this is where we're going to stop. So I'm going to close the this section, and I want to try to go through some of the emails real quick. Don't know how much time we'll have. A lot of these are pretty complicated questions. Let's see what Santosh has. It says, rule 1 is about retracement less than 38%. Clear focus is to market as a 5 during the last 2 sessions. Okay, so rule 1 is about retracement, not less than 38%. I'm not sure. Let me unlock your mic. Let's see this, Santosh. Okay, Santosh, I'm going to go and unlock your mic. So which rule 1, where are you talking about rule 1?
So I'm referring to the chapter 3, where the rule 1 is M2 by M1 is less than 38%.
Oh, right.
So when we are analyzing the monowave M1, and it is the rule 1 says scenario which is M2 by M1, which is less than 38%. The first line in the paragraph says you mark it as colon 5, which is impulse wave, while you've been mentioning that.
Yeah, I would say that this would be less likely to be true, because less than a 33% retracement would be very unlikely, unless you're dealing with very simple structure. Now, when you're dealing with simple structure, a lot of market action does get hidden. So if you're dealing, let's say, with a weekly chart, and the retracement of M1 looks like it's 33%, but when you go to a daily chart, there's actually more retracement than was visible in the weekly chart. Those kinds of things can happen as you simplify data. So I think when I was going through this part of the book, I was considering the possibility of simplification of data and how it might distort what you're looking at. But a big advance is always more likely to be impulsive than an advance that's retraced more than 61%. So it's a possible 5-wave move, but then it has to follow other rules and timing rules and things like that. So the initial placement where it says a colon 5 could be used, but I'm sure there's probably some discussion further on where it does mention other possibilities. So if you're in doubt, I would follow the rules that are listed in chapter 3, but it's very important y'all realize you don't want to read chapter 3 like from beginning to end. You only want to refer to it like you would refer to a dictionary where you're looking up a definition of one word. You don't look up every word in the dictionary to find the definition of one word. So when you're looking at a chart, you want to find the exact situation that fits what you're looking at and apply the rules and pay attention to all the, if then are discussed there and decide which labels can belong at the end of that movement. And it could be a 5, but it also could be some of the other things mentioned in that section, because it mentions, I think, some C3s and some L3s and so forth. So realize it's not, you can't absolutely say something is impulsive or corrective until you see what happens with the surrounding action before and after, and the complexity and the time development and the channeling. This stuff in chapter 3 is just the preliminary step to try to guide you in the right direction so you can begin to place labels on your chart. Do you understand?
Okay.
Okay, so I'm gonna go ahead and move on to the next question. Go ahead and put your mic on mute and let's see. Okay, so Evgeny, I'm gonna unlock your mic.
Yes.
Is it always a requirement that a mod wave should retrace more than 100% and faster than to form to be labeled an L3 or L5? Yeah, the odds are pretty high that if it's an L3 or an L5, it's going to be retraced quicker than the L3 or L5 took to form. You at least want to get down to the channel. If you're in an uptrend, you want to break the channel in the same amount of time or less, but preferably you're going to retrace all of it, because an L3 or an L5 means you're finishing something fairly important. You're not finishing just a mono wave, but you're finishing a group of mono waves that makes a flat or zigzag, a triangle, an impulsive pattern. So the conclusion is more significant and you're looking for more violent counter trend action. Does that make sense?
Yes, thank you very much.
Okay, so let's move on to the next question. Now, it's very important y'all realize y'all should not send me any Excel charts or any Office kind of files, no PowerPoint, because for whatever reason, this Windows environment just does not like me to open those. So it's better you take a screenshot or make a PDF of the file and send me that instead of the actual original file. Okay, so let's see. This is Laban. Let me see if I can find you here in the list. I don't see you in the list. I think that was about something else. Yeah. So I'm gonna move on now. Let's see. This is HK. I assume this is Hamid. You didn't put your name there, but let me go ahead and unlock the mic. So Hamid, what was your concern here?
I attached a diagram. I just wanted your thoughts on whether they were correct.
Okay.
They've labeled. I don't know if
okay.
I agree.
This is gonna, when you're looking at patterns like this gets a lot more complicated to do quick long-term analysis like this, but I'll just take a quick look and see what you have on these charts. Okay, so first thing I would be concerned about in this pattern is where the A wave actually started. If you started at this low, the recovery is too slow. So I would be much more inclined to have wave A. Can you see where I'm pointing right here?
Yeah.
Yeah, I would be much more inclined to have wave A start here, because you can see it begins with a violent move that's faster than the previous decline. Here, this rally is slower than this. So if this is an A wave of a flat, this is probably where it started. Okay, so that's number one. And when you do that, you'll immediately realize that the time of wave A and wave B is almost the same, right?
Yeah.
Okay, so if you go to the rule sheet, the cheat sheets that I sent y'all, if A and B are similar in time, usually that means wave C will equal A plus B in time. And it just so happens if you add A and B together, the time of wave C comes very close. Equal time is right around here. It's just a little bit off, but this would start to look like a pretty good candidate for a flat with a terminal C wave, and that would mean a violent market decline is required. Now, this decline is not violent enough, and the actual equality point in time doesn't happen for a little bit longer. It's right around here. So there's a chance that the market's going to recover, not make a new high, and then start a violent collapse after. Now, as far as whether this is 1, 2, and so forth, in a terminal pattern, you can have drastic differences between the time of 1 and 2, where 1 could be bigger, 2 could be smaller, 1 could be very simple, and 2 could be a lot more complicated. These kind of arrangements are not allowed in regular 5-wave moves, but they are allowed in terminals. So it is possible this is a 1 and a 2. You also don't have to follow the retracement rule in terminals. It could retrace less than 38%, it could retrace more than 61%, and still be wave 2. Same thing applies to wave 4. So if I was looking at this, it looks like wave 1 is very trendy, wave 2 is some kind of correction, wave 3 could be a flat, wave 4 alternates, it looks simpler and smaller and less complicated and less retracement than wave 2 did of wave 1. Then the 5th wave is violent. Notice all the violent action is going up, all the slower action is going down. That's how you know which direction to put your 1s, 3s, and 5s, or A, B, A's, and C's, and E's. And that makes it very clear which direction the trend is in. So the way you've counted this looks pretty good to me, but notice the break of the 2-4 trend line has yet to produce violent downside action, and the ideal time for the entire C wave has not been quite met. It'll be met right around here, and this decline is too slow in relation to this advance. So most likely the 5th wave itself, if this is a terminal, is breaking down into its own little flats. It could be an A, B, C, and the C wave might finish around here, and then we would get a violent sell-off that would qualify this as a terminal pattern. I can't guarantee this is a terminal, but you do have a fairly good setup here with similarity of A and B. The time of A plus B equals C looks like a terminal. All the violent moves are going up. Alternation is present. It all looks pretty good. So this may work out. If you can, it says this is the S&P.
Wow, it's done by Elliott Wave.
Oh, this is the Elliott Wave International chart. Yeah. Okay. So yeah, it's possible the market could top around here and then start a big decline, but it would not be ready yet because the decline is too slow. Okay.
Right. So can you get a throw of it in like the terminal pattern?
No, because the 5th wave has to be shorter than wave 3, and you've already made the high and you've already retraced pretty much all of wave 5. So that implies at least neutrality, not strength. If it was going to be strong and maybe make a new high, it would have had to finish around 61% or less. So the fact it's retraced almost all of wave 5 and broken the 2-4 trend line, that pretty much negates any possibility of a new high. So there has to be a failure, and then the market would collapse.
Okay, right. Thank you.
Okay. What time frame is this? Is it a daily, weekly, hourly? What is this?
I think this is a it's a 60-minute chart.
Yeah, okay. Well, I wouldn't, of course, this turned out to be wrong because the market made new highs, right?
I think so. I didn't really check, actually.
Yeah, no, the S&P made all-time new highs today, closed at the highest level ever. So that would mean this count is automatically wrong. But anyway, those would, if this were happening in real time, those would be the things that I would be looking at and focused on, and I would expect it to finish around here. If it doesn't finish here and collapse, then this terminal is wrong, and I would call this just a C wave of a triangle or the C wave of a diametric, but not the C wave of a flat. Okay.
Right. Thank you.
Okay. I'm gonna see. I don't want to do all your analysis here. You have some other charts to look at, but I want to go through some other questions. I don't think Laban is in this class. I'm not sure. See Nick. Let's see if I see his last name. Yeah, I don't see him in this class. So Panchai, I think you're in this class. Let's see, where are you? Okay, yeah, there you are. So go ahead and unlock your mic. Panchai, you have some diagrams here. Let me see if I can open them up. If we have a little, well, we're really running out of time, so I'm not going to be able to go back. But I assume you're wanting to know how, if your chart is properly designed, and I'd say yes, this is a very nicely designed chart. You can clearly see there's no weird behavior, no moves that are tiny followed by very long drawn out moves. Everything looks very normal and orderly and comfortable and same degree-ish, you might say. So this is a very nice chart and would be the beginning process to doing good wave analysis. So if I was looking at this chart, I would see that this move here was retraced more than 61%. So I wouldn't consider this the start of anything important. You can see how the market, if you tried to channel this, and I guess this doesn't break it, but the really violent move didn't start until here. So I would consider whatever all this was is the end of some previous move, and most likely the real trend began here. Could have been here, but more likely here, because you're looking for violent counter trend moves that's bigger and faster than what's been seen for a while. And I think this move, let me just double check. Yes, this move here is bigger and faster, slightly bigger than this move here. So this could be the beginning of a new trend. So this is where I would start the analysis. Now, noticing that the move has the appearance of a 5-wave move, but then it gets completely, or gets retraced way more than 61%, but then it's followed by new highs, that would negate this as being a probable 5-wave move unless it was the 5th wave of a much larger pattern, and this is the beginning of a much larger correction. So if this is the 5th wave of a larger 5-wave move, maybe this was wave 4 and this was wave 5 and this was a 5-wave move, this would be wave A of a much bigger correction. This would be part of wave B, and they'd get a C wave, and it lasts a long time. But when you start analyzing the internal structure of what could be a 5-wave move, you would see there really is no definitive extended wave unless you finish the pattern here. I can't draw channels, I don't think, on this diagram. Let's see if I can. Looks like maybe I can. Let's see, pencil. Point. I don't know if it's going to draw a straight line or not. Let me just see what happens here. Oh, wow. It's not. I don't know if I can undo that or not. That was not a very good line, was it? I don't know if I can how I can undo that. Let's cancel. Okay, let me see if there's any way to draw a straight line. I don't know if there is. I don't know. Maybe if I hold down my shift key, maybe it'll do. Yeah. So this little bump right here, probably where the channel touches. And if this is where wave 4 ended, then wave 5 is 61% of wave 3. This is not a great two-way from a retracement perspective. It does alternate with wave 4, but remember, this is where you're dealing with very simple structure. You're not dealing with 13 monowaves, so it won't evolve properly. So you have to make some exceptions. So maybe wave 2 or wave 4 won't quite retrace as much. It won't look quite right because of the simplicity of the structure. But this might be a 5-wave move because there is clear alternation between 2 and 4. And if 4 ended here, then the 3rd wave is the longest wave and the 5th wave is 61% of that. So you have a clear extended wave. So maybe it is, and this is a nice violent break of the 2-4 trend line, and you completely retraced wave 5 in about the same amount of time or less that it took to form. So all those rules are met. So it's possible this 5-wave move was the end of a much bigger 5-wave move, and this is the beginning of a much bigger correction. And I would call this wave A here or wave A here. That's because the recovery wasn't completely retracing this move, and it was retraced too much, so you get a better start off here. We have a more violent advance. So if I were to do this, I'd probably say wave A finished here or here, and then we have this B wave forming, and eventually we'll get another sell-off. But that's the way I would begin the analysis of something like this. So Pancha, any questions about that?
No, thank you.
Okay, well, we're gonna have to call it a day because we're running out of time. So we'll pick this up next time, and we're gonna start with the second half of chapter 5, which deals with corrective patterns. So if a formation doesn't follow impulsive rules, then by default it must be corrective, and that's where we'll start chapter 5 next time. So y'all have a good week, and I'll speak to y'all then.